Imagine waking up on a quiet Sunday morning, checking your phone half asleep and suddenly seeing one number that makes your heart stop. $108? Not Bitcoin, not gold, silver. Yes, silver at $108 an ounce. And before your mind can even process that number, you see another alert. Dealers across the country have halted sales. Phones are ringing off the hook. Websites are freezing. And a phrase that Wall Street fears more than anything starts trending quietly behind the scenes. Black Monday. If you think this sounds impossible, exaggerated, or clickbait, then stay with me. Because what you're about to hear could change how you look at silver, money, and the system itself forever. This is Bullion Alert HQ, and if you care about protecting your wealth, understanding real money, and staying ahead of financial shocks instead of reacting to them, make sure you like this video and subscribe right now. We post alerts and deep analysis like this regularly, and you don't want to miss what's coming next, especially in times like these. Take 2 seconds, hit subscribe, and let's continue. Now let's slow this down because moments like this don't come out of nowhere. A silver price of $108 doesn't just happen because of hype or a random spike. It's the result of pressure building quietly for years, hidden under paper contracts, suppressed prices, and a system that depends on people not paying attention. For a long time, silver has lived in the shadow of gold, treated like the cheaper cousin, the industrial metal, the side bet. But underneath that calm surface, something dangerous has been growing. For decades, silver has been one of the most heavily shorted commodities on the planet. Banks and institutions sold paper silver they never intended to deliver, betting that most people would never ask for the real metal. As long as investors stayed inside ETFs and futures contracts, the game worked. But slowly, something changed. Physical demand began to rise, not from speculators, but from regular people, families, retirees, small investors, people who just wanted something real in their hands. Coin shops started reporting shortages. Premiums quietly rose even when spot prices stayed flat. Mints struggled to keep up. And yet, on paper, silver still looked cheap. That disconnect is where today's story really begins. Over the last few years, inflation stopped being transitory and started becoming permanent. Groceries got more expensive, rent climbed, interest rates rose, trust fell. People didn't need a chart to know something was wrong. And when confidence in money weakens, history shows us one thing very clearly. People run toward real assets. Silver sits at a unique crossroads. It's money, whether governments admit it or not, and it's also critical to modern life. Solar panels, electric vehicles, medical devices, electronics, military technology. You cannot build the future without silver, and unlike paper money, you cannot print it. Now picture this. Supply is tight, demand is rising. And on top of that, a massive paper market exists that promises far more silver than actually exists above ground. That's not theory, that's math. So what happens when too many people ask for delivery at the same time? That's when dealers halt sales. Reports started coming in late Saturday night. Major online bullion dealers quietly marked items as out of stock. Others switched to call for pricing. By early Sunday morning, phones were unanswered. Not because demand was low, but because it was overwhelming. People were trying to lock in prices that no longer existed. Behind closed doors, wholesalers pulled inventory. They didn't want to sell silver today that they couldn't replace tomorrow, and replacement costs were exploding by the hour. When silver jumps violently, it's not just a price move. It's a stress test of the entire system. Now here's where things get even more interesting. While retail buyers were panicking, institutions were scrambling. Margin calls began hitting short positions. Futures contracts demanded more collateral. And suddenly, silver wasn't a sleepy metal anymore. It was a threat. A price like $108 sends a message. It says something broke. It says the paper price can no longer control the physical market. And once that line is crossed, confidence doesn't return easily. You might be wondering, why Black Monday? Because markets hate uncertainty, and silver exploding on a Sunday sets the stage for chaos when traditional markets open. Stocks don't like rising metals, banks don't like losing control, and governments don't like signals that expose currency weakness. If silver can triple or quadruple in a short period, people start asking uncomfortable questions. Is the dollar really stable? Are bonds safe? Is my money in the bank actually protected? These questions spread fast, especially in the age of social media. And remember, silver isn't gold. Gold moves quietly, slowly, like a giant ship turning in the ocean. Silver moves like a speedboat. When it breaks, it doesn't crawl, it explodes. Now let's talk about what this means for the average American watching this video. This isn't about getting rich overnight. This is about understanding risk. When dealers halt sales, it means price discovery is broken. The number you see on a screen no longer reflects reality. Physical silver becomes whatever someone is willing to pay to get it right now. That's why premiums detach. That's why spot price becomes almost meaningless. And that's why people who already hold physical silver sleep better during moments like this. They're not chasing. They're not panicking. They're watching. But for those who waited, who trusted the system, who assumed there would always be time, this kind of move feels like betrayal. Because suddenly the door looks very small, and everyone is trying to squeeze through at once. This is where emotions take over. Fear, regret, urgency, and markets feed on emotion. As Sunday turns into night, financial media starts scrambling. Some will call it a speculative bubble. Others will blame retail investors. A few will quietly admit that something structural has changed. But what they won't say clearly is this: the silver market was never as stable as it looked. For years, low prices discouraged mining investment. Mines closed, exploration slowed. At the same time, industrial demand kept rising. You can't flip a switch and produce more silver overnight. It takes years, sometimes decades. So when a shortage appears, it doesn't resolve quickly. It compounds. Now imagine Monday morning, futures markets open, stocks react, volatility spikes, headlines scream, and that's when the real panic begins. Not because silver is expensive, but because it reveals how fragile everything else is. People often ask, can silver really go this high? History says yes. Adjusted for inflation, silver has been far higher than this before. The only difference now is the scale of debt, the speed of information, and the lack of trust. Trust is the key word here. Money works because people believe in it. When belief cracks, even slightly, the reaction can be violent. Silver doesn't need everyone to believe in it. It just needs enough people to doubt everything else. That's why moments like this matter. They're not just price events, they're psychological events. At Bullion Alert HQ, our goal isn't to scare you, it's to prepare you. Panic helps no one. Understanding helps everyone. If you're holding silver, this is not the moment to get emotional. It's the moment to get informed. If you're not holding silver, this is not the moment to chase blindly. It's the moment to understand why this is happening and what it signals. Because here's the truth most people miss. Silver at $108 isn't the story. The story is what breaks when it gets there. Paper promises get tested. Liquidity disappears, confidence erodes, and systems built on leverage start to wobble. And once that process starts, it doesn't simply reverse because someone says everything is fine. As we move forward, the most important thing you can do is stay calm, stay educated, and stay ahead. Don't rely on headlines alone. Don't rely on institutions that have incentives to downplay risk. Do your own thinking. If you've made it this far, I want to hear from you. Do you think this silver move is the start of something much bigger, or do you believe the system will regain control? Drop your thoughts in the comments below. I read them, and your perspective helps this community grow stronger. And if you found this breakdown valuable, share this video with someone who needs to hear it. Not to scare them, but to wake them up. These conversations matter, and they matter most before the panic, not after. This is a moment people will look back on and say, the signs were there. The only question is, who was paying attention? Stay alert, stay grounded, and stay connected with Bullion Alert HQ. Because when the noise gets loud, clarity becomes priceless.